Banks often tell us that our money grows when it sits in our accounts. While this might seem true on the surface, the reality is quite different. Yes, your money might grow in number because of the interest rates they offer, but it doesn't grow in value. Inflation, the silent wealth killer, rises much faster than most bank interest rates, eroding your purchasing power over time. In simple terms, keeping cash in a bank account is like watching your money slowly lose its worth. In this video, we'll share 7 powerful assets that can protect you from this wealth erosion and help you create lasting intergenerational wealth. Stick around because these insights could change your financial future forever. If you're serious about improving your financial future, don't forget to subscribe to the channel and hit the like button if you find this video helpful. Let's dive in. 1. God's money, gold, silver, and platinum. One of the most enduring reasons money is considered valuable is its ability to store wealth for the future. But today's governments print money endlessly to fund deficits, leaving currencies vulnerable to devaluation. This is why financial experts often recommend precious metals like gold, silver, and platinum as investments. These metals are scarce, cannot be created artificially, and retain intrinsic value, making them a safe haven in uncertain times. Gold, for example, has consistently proven its worth over decades. In the 1950s, an ounce of gold was priced at around $400. Fast forward to 2023, and that same ounce is valued at over $2,000. Experts forecast that gold's price could rise to $10,000 per ounce by 2032. That's a 5-fold increase in just 10 years. While cash loses value, gold holds and even grows in value over time. If you're wondering how to invest in gold without dealing with physical bars, gold ETFs, exchange-traded funds, are a fantastic option. These investment vehicles track the price of gold, allowing you to benefit from its price movements without worrying about storage or security. Other precious metals like silver and platinum, with their industrial and decorative uses, also serve as excellent inflation hedges. In addition to precious metals, Bitcoin has emerged as a modern alternative for storing wealth. Often referred to as digital gold, Bitcoin shares key similarities with traditional gold. It is decentralized, scarce, and cannot be manipulated by any single government or institution. With only 21 million Bitcoins ever to exist, its limited supply makes it an attractive hedge against inflation. Bitcoin has also proven its resilience over time. Since its inception in 2009, Bitcoin's value has grown exponentially, becoming one of the best-performing assets of the past decade. In periods of economic uncertainty, Bitcoin is increasingly viewed as a store of value, with institutions and individual investors alike adding it to their portfolios. For those interested in gaining exposure to Bitcoin, there are multiple ways to invest. You can buy Bitcoin directly through cryptocurrency exchanges, or invest in Bitcoin ETFs, which provide indirect exposure to the asset. While its volatility can be intimidating, many experts believe Bitcoin's potential for long-term growth makes it a worthwhile addition to any diversified portfolio. 2. Industrial commodities, raw materials. Precious metals might get all the attention, but industrial commodities like cobalt, nickel, copper, and silver have immense value too. These materials are indispensable due to their unique properties and widespread use in modern industries. For instance, silver is essential in electronics, medical equipment, and even nuclear reactors. Take cobalt as another example. With the rise of electric vehicles, EVs, demand for cobalt, a critical component in EV batteries, has skyrocketed. Its price has doubled from $20,000 per ton in 2012 to $40,000 per ton in 2022. This illustrates how industrial commodities can significantly enhance your portfolio during high-demand phases. Investing in these materials directly might be challenging due to storage and logistics issues. However, you can gain exposure through mining stocks, commodity-focused mutual funds, or derivatives like futures and options. Companies like Rio Tinto offer excellent investment opportunities in this sector. 3. Safe haven currencies. In the world of fiat currencies, geopolitical stability plays a vital role in determining a currency's strength. That's why many wealthy individuals park their money in Swiss banks or other institutions that use stable currencies like the Swiss franc. Switzerland's strong economy and neutral geopolitical stance make the Swiss franc a safe haven during global crises. For example, during the Eurozone debt crisis in 2009 and the global financial crisis of 2008, significant funds moved to Switzerland to protect against currency depreciation. Similarly, the recent Russia-Ukraine conflict pushed Russia to use the Swiss franc for international trades after sanctions on the US dollar. Not everyone can open a Swiss bank account, but there are accessible ways to invest in stable currencies. Currency ETFs and Forex platforms like Forex.com allow you to gain exposure to currencies like the Swiss franc, British pound, and Chinese yuan, often with as little as $100. 4. Sovereign guarantees, government securities. Have you ever noticed the words, "This note is legal tender for all debts, public and private," on a dollar bill? Since the gold standard was abolished in 1971, the US dollar's value is backed solely by the government's full faith and credit. This makes investing in government-backed securities a reliable store of value. Sovereign guarantees like US Treasury bills, notes, and bonds are among the safest investments you can make. These instruments are supported by the economic strength of the issuing government. The likelihood of a stable government defaulting on its debt is extremely low, making these assets a haven for conservative investors. Small investors can easily buy US Treasury securities through the Treasury Direct portal or on the secondary market. They offer higher returns than bank accounts and are virtually risk-free, provided you stick to investment-grade securities from stable governments. 5. Value stocks and mutual funds. While government securities are safe, they often provide lower returns compared to stocks. Stocks, especially value stocks, offer a way to balance risk and reward in your portfolio. Unlike growth stocks, which focus on high-risk, high-reward ventures, value stocks represent established companies with steady demand and consistent dividends. For instance, companies like Nucor, which operates in industrial metals, provide both price appreciation and regular dividends. However, researching individual stocks can be time-consuming and complex. This is where dividend-focused mutual funds, like the Vanguard High Dividend Yield Index Fund, come in handy. These funds offer diversified exposure to reliable dividend-paying companies, making them ideal for retail investors seeking stable returns. 6. Land and real estate. Land has been a valuable resource for centuries, and it's not hard to see why. Unlike other assets, land doesn't depreciate. It's scarce and always in demand. From housing and commercial spaces to agriculture and industrial development, land underpins countless sectors of the economy. Real estate, whether residential homes, office spaces, or commercial properties, is another excellent inflation hedge. According to Bloomberg, housing prices have tripled between 1992 and 2020, despite the 2008 housing crisis. This demonstrates the resilience of real estate as an asset class. Contrary to popular belief, you don't need a fortune to invest in real estate. Real estate investment trusts, REITs, such as Ventas Inc., allow investors to gain exposure to the real estate market without buying property outright. These trusts pool money to invest in income-generating properties, offering dividends to investors. 7. Collectibles, timeless treasures. Collectibles like vintage cars, rare art, limited edition watches, and first edition books are another asset class worth exploring. These items, unlike most consumer goods, appreciate over time due to their rarity and historical significance. For example, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe sold for an astonishing 135 million euros in 2022. Similarly, Leonardo da Vinci's painting Salvator Mundi fetched $450 million in a 2017 auction. The wealthy invest in these timeless pieces not just for their beauty, but for their potential to yield astronomical returns. Platforms like Whatnot make it easier for smaller investors to trade collectibles like comic books, baseball cards, and action figures. For those unable to afford entire items, fractional ownership platforms like Masterworks offer opportunities to invest in high-value collectibles with minimal capital. Banks may promise that your money grows in your account, but inflation ensures that it's losing value over time. To truly protect and grow your wealth, you need to diversify into assets that outpace inflation. Whether it's precious metals, industrial commodities, real estate, or collectibles, these assets provide the security and growth potential that cash cannot. Take the first step today to safeguard your financial future. If you found this video helpful, don't forget to like, share, and subscribe for more insights on building and preserving wealth.